Okay, our stream is live. Good morning, good afternoon, wherever it is that you are watching this. More than likely, it's good morning, I think. Uh, and Want to toss this over to my co-pilot here, uh, Thomas Stephen Moynihan. Good
Good
morning.
morning, Don. To start off, I want to give you our disclosure. Um, we're not financial advisors. We're not giving you financial advice. We're just three guys. Mike Sullivan's not here with us today because he's still on an island in the Caribbean someplace, uh, enjoying himself with his family. And so we want you to know that. What you're going to see us is the trades that we make, the things that we talk about individually that we've done ourselves. Um, so again, we're not financial advisors giving you advice, but you will see some live trades that we're making here so you can actually see what you can get to yourself in a relatively short period of time. That's the goal of our quest here.
Awesome. Yep. And well said. And it is the goal of the quest. So our quest, our the podcast is called Quest to a Million. And it's all about taking $250 and turning that into $1 million. How long that'll take, we don't know. We've never done it before in this format. And we're talking about with Forex. And all three of us, and I really do hope Mike, if he's able to catch this, I know he wanted to be here, but he just does not have good internet where he is. And so he'd come in and go out and he'd have issues. He tried to the other day. So instead, he's taken a few days off, which he should with his family. And so I hope you're enjoying yourself, Mike. But he'll be back here, I think, sometime next week. And when he is, then it'll be the three of us. For now, you get the two of us. So we are going to show you some potentially live trades. On Monday, when we broadcast, I took a trade there. I showed you, I went through marking the charts, and I was looking at Euro USD, which is one of the Forex pairs that I like. And I found a trade that I said, you know what, I want to get into this trade. And so I'm going to pull up that trade. Actually, I pulled up the wrong one. I can show you this one too, because this is a different trade I did. But I'm going to show you both because I think this is really helpful to understand with Forex.
All right.
All right. So this is a trade. I just happened to record this one. This is from 213, one of my TPs that I hit. So TP is take profit. And so I took a trade here, believing that the market was going to go up. And I sold it right there, right where you see the end of that line. You can see that was my profit line. And I didn't record here what my profit was, but profit is all a result of the size of your lot. And as is risk, by the way, and how much money you could lose. Okay, because whenever you're doing a trade, you could get a profitable trade, or you can get a losing trade, right? You can make a mistake and the market goes in a different direction. Or what else can happen? We got fundamentals, right, Stephen?
Right. Yes.
You know, so anybody, it could be Giorgia Meloni comes in and says something. It could be I don't know how to say her name, but the Prime Minister of Japan, the new
Japan.
president. So she seems to be doing a fantastic job there. It could be, President Trump. It could be anybody, Jerome Powell, that can move the market by something that they're saying,
Correct.
right?
Yeah,
And
we've seen that.
say that again.
We've seen that. Yes.
Yes, we have seen that. I know, and I said this. I said this the other day, but I was in a gold trade when Jerome Powell was talking, and I was warned about it. It's like, Jerome can really mess with you. And he said something that I thought was going to make gold go up, and instead it made gold go down. I had it wrong, and it was mere moments after he said it. I lost like $100. Right now, $100 doesn't seem like it's a ton of money, and it's in the grand scheme of things, it's not. But when you're starting off with $250 and going to $1 million, it matters, right? So once you're up at that 100,000 mark, 200,000 mark, and you're getting closer, $100 is not really a big deal. And you're going to have those, by the way, right? Just whenever you're learning to trade, you're going to have those. We're learning, Stephen. I'm going to pull up the other ones. Would you just do me a favor? Just let everybody know about how we're learning, right? What we go about, the classes that we're taking, that whole process, and what we have access to.
Right. We're in the Build Network, BYLD, and their trading academy. And the Forex trader teacher that we're learning under, his name is Donnie Pips. And he's really, if you look at him, he's really unassuming. And once you start listening to him, you realize that he knows the market. He knows the fundamentals and what he's teaching us. And he has a format to it where it's by osmosis almost. It's little by little. Each class we get more knowledge and more knowledge. In a relatively short period of time, if we started this in October and we're now in February, that's not long to be able to learn to trade and be profitable and really see that you can do it and have the confidence to do it. And what he does, he wants to give you, us as individuals, the fortitude. That's the word he uses, the fortitude to push the button to go live.
Yep.
And when you understand how he sets it up and what Don's speaking about the lot size, it's minimizing. If there's a loss, it's minimal. If there's a win, it may only be $50. It may only be $20. But what Donnie says, and he's practical about it, is, what's minimum wage? If you think that this is get rich, get quick, and you're going to get there overnight, this is not here for you. I mean, you could get lucky with it, but it's learning, and it's doing it in the right way. And he also teaches you and educates us on the mental fortitude that we need, going into a trade and try to eliminate the emotional side of it and stick to the fundamentals. That's probably the biggest part of this learning curve.
Yep. 100%.
Yeah.
And I'm glad you shared that, because it's important to understand is we're not just guessing.
Correct.
We're going through trainings. We're learning different things. And I'm going to show you how we mark up charts and how we do some of that stuff. And I do that. I do that fairly frequently. And usually we'll go back and forth and we'll talk about different things. Like, Mike does his charting a little bit differently than I do. He might see something I don't, and vice versa. But I wanted to compare these two. These are two trades I did. Both of them profitable. So one much more so than the other, but nonetheless. But it was interesting too. So this trade that I was just showing you a little while ago, this was a trade that started. These are hour candles. I typically trade on the hour time frame. We're what's called time frame traders. So we focus on a certain time frame. So every one of these candles represents an hour in the day on the market for this particular pair. So this is Euro USD, and the first one over here on the left. And I was expecting it to go up. I had a take profit here, and it hit it. Okay, so that was all good. And that was let's see, I can't even tell how much that was because the print is a little small, but that was probably, I think that was 25 pips. And I'll explain pips in just a minute. But this one, so this was the one that I got into. I took this trade while we were on the podcast the other day.
Right.
And the market was here when I got in. Now remember, these are hour candles, H1. And so it's the hour, right? The 1 hour. And I took the trade here and I said, this is going to go down. And I was looking at all of my marks on my chart and saying, this is going to go down a ways.
Right.
And I think I was right. So
yes, you were. Yes.
Instead of like 26 pips, I earned 313 pips. Okay. And again, I'll get to the pip thing in just a minute. But here's what you're going to experience when you're taking these trades. And this is something Mike likes to talk a lot about, is that drawdown. We got to be careful of that. So I got in this trade right here. And had I waited, I could have technically got in over here. Because remember, I think it's going to go down, right?
And you had talked about that at the time, but
right.
the podcast was ending and you wanted to get in. Yes.
Right. Well, and we wanted to. And one of the things, by the way, Mike messages me afterwards and says there was also an engulfing candle, which is something that I didn't catch that morning. So I want to show you that. We're just going to make this part a little bit bigger so you can see this here, because I'm just going to focus on this one. But this candle here, this red candle, which is a bearish candle, bearish meaning it's coming down, right? And bullish is green. This is an engulfing candle. In other words, the candle, what happens is when you get a candle here for this hour, and you're only looking at the body of the candle, not this wick, okay, the body itself. Where this one closed, which is right here at the top, this one opens, and it opened, and when it closed, it moved more than the size of this entire candle. So it engulfed that previous candle. And so I didn't even catch that when I was looking at it. Mike did, because he messaged me afterwards. Hey, by the way, you get an engulfing candle there. And he was right. And typically when you have an engulfing candle, the following candle does what this candle did. So if this engulfed and it went down, well, usually this candle is going to go down as well. And that is exactly what happened. It doesn't happen every time, but it is the typical, right? So I stayed in. I did not, my take profit was way down here. Okay. So I had a ways to go to get it down here. And so it came down a little bit. I could have made money if I sold it here. Could have made money if I sold it here. Now it starts to reverse. It's going back up. Wait a minute. Remember, I got in here, right where that little mark is. So if you go across, now I'm losing money. I'm in drawdown. As the market goes up, I'm potentially losing money. And it still went up a little further. And in my old days when I started, just a few months ago, I would have jumped out. I would have been like, oh man, this is going in the other direction. I'm stuck, right? And I would have taken the loss, and that was that. And I'm really, really working to not do that. If all of my data is correct, I want to trust my data.
And there was a lot of data that on this trade.
There was. And there was not a lot of fundamental stuff. So not a lot of news out there that through the market. So I was really focused, and I like days like that because I don't have to worry about surprises.
You know why? Because that was on Monday, President's Day.
That's right. So everything was quiet. Yep. So it's a perfect day to trade because you only had to look at the fundamentals. I'm sorry, you only had to look at the technicals. What's really happening with the market? Not, okay, this world leader said this, or this financial leader said this, and it changes everything. Because that happens too often. So I stuck with it, even though it was going up and I was in a loss at the time. And by the way, that almost hit my stop loss, because my stop loss was where was it? It was above the TP. I forget exactly where it was, but it was above my 200 moving average, which is this yellow line, this golden line. So it was higher than that, but it was moving towards my stop loss. And if it hit my stop loss, I would have been out of the trade, and that would have been it. Now, the crazy thing was, all right, this is hours later, because remember, every one of these is an hour. I got in on this hour, but 1, 2, 3, 4, 5 hours later. So let's say I got into this at 10:30 in the morning. All right, so now we're talking 3:30 in the afternoon, whatever it is, and I'm in meetings, right? So I'm not even paying attention to this. I knew because of the numbers that it was, I believed that it was going to go down. But I knew my worst case was if it hits my stop loss, I lose X amount of money. And if I hit my take profit, then I make X amount of money. Right? Sounds good. Now, from here, that was its highest point. Then it started to move down. And this was nice. You know, you see this drop, more drops, goes up and down, more drops. And finally, this is where my take profit was. I was not even looking at the trade when my take profit hit. All of a sudden I look and it's like, oh, cool. I made money. It was that simple, right? And it got out here. The market did close up higher. All right, it did go down. You can see how far down this wick goes, shows you how far it went. Had I stayed in, the market continued to go down. So I could have made even more. But that was below where my my zones were. Like I had zones where I said, it's going to go down to this point and it's going to get stuck and it might start to turn around. Now it didn't turn around at that point, but that was why I set my take profit there. And this is just an example of, so that's two trades I just showed you. Those are typical, right? But this one, by the way, if you think about this, these are hours. And if this was 10:30 in the morning, call it, just 10, 11, 12, 13, or 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Now we're in the next day, right? So this was halfway through the next day. Most of my trades that I try and do are within the hour, within a 1 hour range. But I was so positive that this was going to continue to go down that I just left it alone because I did check it during the course of the day.
Now, when it took the profit, were you online at that time or were you in meetings?
I was in meetings.
Yeah.
Yep. I looked back, it's like, oh, cool. I made some money. And here's the thing, right? My stop loss was about 60 pips. I'm going off of memory now. I didn't write that down. I should have. Which meant, depending on my lot size. So when you're trading Forex, right, what we're trading is a lot size. We're saying, okay, we're willing to trade a penny or a dollar, right, per pip, whatever it is. Could be 10 cents per pip. And say, well, 10 cents, that's not a whole lot. Well, it isn't, right? It really is not a lot. But when you get the system down, and this is one of the things that we're trying to get across, and we're trying to get to internally ourselves, right? I know Mike and I especially have been doing this. I know, Stephen, you've been focused on really understanding this too. But when you have, let's say you do a lot size of 0.01, right? That's a really small. At 0.01, this huge drop would have made me $3.13. Mm-hmm. Okay. Now at 0.1, it would have made me 10 times as much, $30.
Now, what did you do? What were you at?
At that one, I was actually at 0.1. Mm-hmm. Right. Because I knew anytime I know I'm not going to be able to be at my computer, I still set my stop loss unless, I've done 0.5. I've done some pretty good sized trades.
But that's when it's a short period. It's a short time period.
Right.
You could be in a minute, 5 minutes, 15 minutes.
Right.
Clock, and you're there and you're paying attention to it with that.
Yep.
And really what you based it on was that you were not going to be able to give it the time to be there all the time.
Right.
So you set your lot size based on, okay, what am I willing to lose today?
Exactly, on that. Yeah. So, but I could have made $3. I could have made 30. I could have made 300. I could have made 3,000. I could have made 30,000 on this same exact trade. Just depends on what I was willing to risk. All right. And also the size of my account So I took some hits in gold that really hit me hard. Like I was doing really well, and those hit me hard. And there were some mistakes that I learned that um, I've learned from. So when you're starting out, you want to start either on paper trading, which is preferable. Paper trading is just you're doing a demo trade, right? You're not gonna lose money. You're not gonna earn money because it's all on paper. It's monopoly money. But you want to learn the process, get the feel, right? And then as you get into live trading, depending on how much money you have in the account, you're going to start at small numbers. But that's okay, because when you get 10, 20, 30 trades and you're at 80, 90% profit, right? You're only losing or having a losing trade 10 or 20% of the time, then great. Now you start to ratchet those things up once you get a really good feel for a pair or a couple of pairs. And so you can keep building that up. Right. And it's that simple. So for those of you who are thinking, oh, I don't know if I could learn that, or you can learn it, because there's just things to look for.
Right. On that note, we have a community that we trade in also too. So it's just not you by yourself or the three of us by ourselves. And we have a group of 75 people growing, mornings that were there, and it's interactive. So you hear other people within the community asking questions. And again, a big factor is that when you already know the answer, it makes you feel good. It's like, oh, I know that answer. And but there's other people just like we are. I mean, we've never traded before. We don't come from Wall Street. We're not, stock pickers in that. And this is not picking a stock. This is something it's very different and unique. And I didn't really understand it until I got into it. And now, there's no going back.
There isn't. It's too much. It's almost addicting. I will say that.
But the greatest thing, one of the things, I'm sorry to interrupt you.
Sure, go ahead.
Is that if you're looking for additional income, this is you learning this system, which, if you've passed kindergarten, you can get this. If you can read, and you don't even have to write, but you need to read and do basic math, you can get this, because there's nothing complicated in it in terms of education. It's not like you need to have an advanced degree to get this information. And there are people in our community that have their kids that are starting to trade, that are, I think Sam Beam has his 11-year-old son in there. Somebody else has their 13-year-old daughter in there. So they're getting it. And if you have kids, they can spend time on Xbox, but maybe you can X the box and have them start trading.
I like that. Yeah, and why not? I mean, think about it. They can put in. Oh, Mike's son put in $50 to start.
Correct.
When you can deal in pennies and dollars, small dollars.
Yeah.
It doesn't matter if you lose it. It's like it's learning. Think about what you pay for a 4-year college education.
Right.
Sorry about that. Oh, we got a sell alert. Einstein. I didn't mean for that to be as loud as it was. But that's a sell alert on Einstein for gold. We'll have to go to that in a second. Actually, I'll go there and then I'll come back here because I wanted to go through this trade with you that I did. But let's take a look here. So Einstein put this out that gold is coming down. Now, Einstein said, by the way, the trade I just did, both of the trades we showed you, those are not Einstein trades. Those are trades that I chose to do on my own. I'll take Einstein trades as well. Einstein, you just saw the alert, said, hey, take a sell on gold. And this is where it came out, the entry. It's already hit take profit 1, which is not a big marker, but take profit 2 is here, and it's moving pretty fast. Gold moves fast, and so I could have jumped over, grabbed that trade. I've got my trading window up on a different screen, and I could have, if I had gotten in there, I would have already made, well, let's see, we're at 3, so I would have made about $3 had I gotten out there. Now, had I gotten down here, it would have been about 8 so far.
And again, that's based on your lot size because it's a small lot size.
But that would have been literally, I mean, what was that, 2 minutes ago? Not even.
Yes. Yeah.
And $8 in 2 minutes. Now,
Right.
as I ratchet up my lot size, even from 0.01 to 0.02, what does that do? Well, that's doubling it. So if I was going to make $8, then I would have made 16. Right? If I'm
In less than in minutes.
Right. Then, or if I went to 0.03, now a lot of times on gold, I was at 0.03. And so instead of that 8 or 16, it would have been 24 in that same, 2 minutes. So there's a lot of opportunities like that. I could have taken that one, and there'll be more alerts. I like Einstein because Einstein is almost always right. But I don't necessarily do those because my goal here is to learn this. I'll take them if I get it in quick enough. But I also don't want to distract from what we're doing here. So let's go back to the Euro USD for a second. I want to go through this because
On that, I want to add something on that note
Yeah.
that you just had there, because there's a part that.
You want me to go back to gold?
And that's learning this yourself. Like Einstein gives us an alert, and we understand why. We can see the indices that are there and why it would make that call.
Yeah.
Now, there are algorithms that you can use, and we have those here, and they're outstanding, where you don't need to learn anything. But the three of us, we want to know. We want that knowledge as well. We just don't want to leave it random and have, the computer earn it for us. We could, and there are people that do. And there are people that pay, $10, $15, even $20,000 for some of the algorithms to put money in and have that run. Here, you've got the option.
Yeah.
One of the things we all encourage everyone to learn to understand. You don't have to be the top expert in it, but to understand why the algorithm, the computer, is recommending this.
Exactly. Now, and by the way, because I went back to Euro USD where I made those two trades I just showed you, and you'll notice Einstein had done a call here. This was this morning at 8:15 this morning. Einstein said it's going to go down, right? So take a sell, and if you'd gotten in here, this take profit 1, this take profit 2, and it kept going down.
Yeah.
All right. So it's a good call. Definitely a good call. Could have done that. So what I wanted to do is show you where I was the other day, and where that trade was that I did, because I wanted you to see that process here. Let me bring these over. So Monday, and I'm on the 15-minute. That's why. I knew this is looking really odd. Okay. Yeah, remember each candle is based off of a certain time frame. So now you can see up above we're on the hour. But when we're looking at gold, and when I switched back over to Euro USD, that the gold was in a 15-minute time frame. So when I took that trade the other day, I took that trade. Where was it? Right here. No, right here in this window. There's another sell on gold. So we get plenty of those. So I took that trade right around on this candle. Okay, and you remember the next candle went down, and then it went up, and then it went up a bit, went up, came down. So it did some different things, but then it kept going down. Now my take profit was on the back wall here, right? So I'm gonna have to turn off those alerts. I get all these wonderful alerts. It's like, all right, hey, here's another trade, here's another one. So I took it from, what is it? Right around this area, one of these candles, and took it down until it hit the back wall here. Once it hit that back wall, that's where my take profit was. And this zone, this demand zone, we call it, is the zone that I felt it was going to go down to. And I was right.
Yes.
And it did still go down further, but then it turned around, went back up, actually went higher into this zone. But I want you to see that, right? We had this zone up here. So this zone held, and this zone didn't quite hold, but it turned around not long after, right? So there's ranges that you can predict, is the point, that are usually fairly accurate. And there's different things you can utilize to say, hey, what is most likely going to happen? And that's what this is all about, right? We're learning these things. So again, not financial advice. We're not saying this is what you want to do. What we're saying is this is what we're doing, and we're documenting our journey. What we're learning, we're going to share with you when we lose. We're going to share with you when we win. And we're going to share with you, I should say, when we're profitable, and why, what we learned from it. So now, and it started to move down, came back up, right? And then you'll notice on the, I think it was the 15-minute, there was another call that said it was going to come down on Einstein from the other side. Over here, it said Einstein made this call. You can see that was the last 1 hour time frame call that Einstein made on Euro USD. Said it was going to go up, and it hit take profit 1, and it hit take profit 2, and then it came down. Right? So Einstein's pretty accurate, is the point. Sometimes it's really fast, sometimes it takes a few hours. So what are your thoughts there, Stephen, as I go through this? And I want to mark up a chart. We don't have that much more time left in today's episode, but what are your thoughts as we go through some of these things? We're going to say, if you hadn't looked at this at all, and you said, well, what would your question be looking at this?
Like coming in new?
Brand new. Can you think of what you would have thought?
Yeah, well, you would say to start out, when you first started and at the beginning, what were the indicators that you were looking at to make that?
Yeah, good.
What gave you that?
Question.
What gave you that confidence to do it?
Yeah,
real. In that case, there was more. There were several.
Yes. Yeah. In that particular case, when I was doing that trade, we had multiple things going on. So going back to that trade that was over here, right around, am I on the 1 hour Euro USD? Oh no, that's Friday. Sorry, wrong day. Kind of important I'm in the right time frame.
Yeah, we're on Monday, I think, right?
Yeah, right there. So what I knew was this candle was below the 200 moving average. And I was also, which is when the 200 moving average is a rejection line, the odds are it's going to continue to go down. That's a pretty strong line. That's an average over the past 200 moves, or in this case, 200 hours of trading time. And I looked at the other moving averages. So this is the 200, the gold. The 10 moving average is the white. You've got the 20 moving average, which is the blue, and the 66, which is red. All right, so I was looking at those. I was looking at the fact that we had an engulfing candle. So, and that was this one. No, so this is the one I got in on. I'm sorry, no, this is the one because this was an engulfing candle.
Yeah.
Right. And so that was another factor. Said, okay, this is going to go down. The next thing was I'm looking at the zones. So I had already mapped out this zone here. This was a supply zone when the market was up here. This turned into a demand zone. Okay, demand zone is usually below where the market is. I'm sorry, it was a supply zone turned into a demand zone, and then what happened was when in a demand zone. I'm sorry, I said that wrong. So as we said, we're learning this, right? I got to think through these things sometimes. It's not always like right there. So this was a demand zone turned into a supply zone, which is like this red one up here. That's a supply zone. Okay. And so usually the market's going to hit in that supply zone and then bounce down. Like let me shut off Einstein for a second so you can see this. See that back wall of that zone? It held all of those candles. They never broke through it.
Yep.
They might have pierced it, but they didn't close through it. All right. So that was a pretty strong point to say, okay, when it gets to here, there's a whole bunch of sellers that want to sell on the market and it's taking it down. So that's a pretty strong zone. When I look down here, this was a demand zone because same thing. You can see candles hit, but they didn't break through and close below this. So this back wall was a strong zone.
Right.
All right. And then as I kept going and I looked at Monday and I got to here, I knew that we were already past that zone because we were down in this zone and we had already flipped it, which means I should have actually turned this red. Okay, because we had broken into it, and I knew that that's what was going to happen. This is going to be red. I never changed the color of it, but let me do that right now. Okay, so I knew that this was now going to be the new back wall. This is going to be the front wall, and I knew that that the 200 moving average, which you don't see here because I have it in my Einstein. So let me put that back. So I knew that this 200 moving average was going to continue to hold it, or I believed it was going to hold it. But I also knew this. I could see that the 20 moving average was going to cross over the 200. And I could see that the just the trajectory, I can say this, right? Of the 66 to the 200, the 66 was also going to cross the 200. So when you've got the 200 above the 66, above the 20, that typically indicates that that market is going down. Okay. And if you look when this cross hit right here, it really started to plummet. Okay. And that's partially what I wrote down. I knew that cross was going to happen, and the reason I was so positive was, again, it was Monday. There was no news that was coming out that could change the market. So it was strictly strictly technicals. And this is all technical. The fundamentals are the things that, like I said, the president speaks, Jerome Powell speaks, the Fed chair speaks, or somebody like that. Those are fundamentals. Technicals are what you see on the charts. And so I knew it was coming down. And those were the reasons. To answer your earlier question, I don't know if that all made sense, but those were my reasons for taking that trade.
Exactly.
And I think I was right.
Yes.
300. Good.
13 bips, right? Yes.
Right. Yeah. He says, you get 20 pips, don't get greedy. take the 20 pips. I was so positive it was going to continue to go down that I had a huge spread. And I had to wait many hours to get that whole profit. I could have gotten out at any of these times and taken a profit.
And you may have, but you were busy.
I was busy, but I did check in from time to time.
Correct. You knew where it was. Yes.
But I also knew all of these things were up here.
And how strong they were. Yes.
Right. And I knew that my next level of support was way down here. And I'm like, you know what? I'm just going to take it down.
Yeah.
So, and I did. And that's really what this comes down to. It's understanding these things. So we don't really have a whole lot of time today to go into charting. I kind of wanted to do that. But you did get to see some Einstein calls. I will say this. Einstein comes with the quest that we're doing, right? And so you can see I got an Einstein call on the 30-minute. I got one on the 15, the 15, the 15, the 30, 15. A lot on gold. Why? Because I have it specifically telling me about gold. I also have it telling me about Euro USD. So you can see a few of those.
Right.
The 1 hour on Euro USD. And there were a few of them, right? Those are really the ones I'm looking for. His one on UJ. So the Euro and Japanese yen. And this particular one, let's just see how that played out. I didn't even look at that one. So this particular trade was on the 1 hour, and I'm going to believe it was this one, and it said I can tell it said it was going to go down. Yep, yeah, it is. So you can see the entry point was right here. Said it was going to come down. Take profit 1 was here. It hit take profit 1. It did not hit take profit 2. But if I stretch this out, you can definitely see it hit take profit 1.
Yep.
Right. So, and that was, let's see, that was about 20 pips. So, and that's really what we're looking for, 20 pips plus. Because if you can get 20 pips pretty much every time.
Correct. Yep.
And so if your only lot size is 0.01 and you're going to take 20 pips, that's not a lot of money.
Yeah.
Right now we're talking pennies, literally. But how many trades can you take if they were all profitable trades and they just happen to be small trades? Is there any limit to the number of trades you could take?
Correct.
If you're not losing money, then you can keep adding more. And then as
Right.
you get more comfortable, you can keep building that up and building that up. And as your account builds, you go to, 0.02, 0.03, 0.05, 0.06, 0.0. You just keep building it up. And now each trade is worth more, but you built up your level of confidence and you built up your account. Those two really sort of go hand in hand, right? And if you don't get crazy, like I did a few times, and lose a bunch because you're just like, oh, I think this might happen. I don't know. Because it's so easy to almost gamble in this.
Correct.
Right. And so I and you know this, Stephen, I set a set of rules for myself. Yeah. And I still have, by the way, if you remember this, right?
Yes.
This is in front of me. So it's funny, on my screen, I've got this little Post-it note that says 20. Because one of the things I was doing outside of I know I just showed you the 300 pip trade that I took, but what I was doing was I'd get into a trade that really I should have been in for a short period of time, taking 20, 25, 30 pips and gotten out. And I look and say, you know what? I think it might go a little further. Let me just let it ride. And then it goes in the other direction, whatever direction that is.
And what you just said is that you thought it would. There's some indication that it would. In this case, there were all the indicators that we could have all said,
right,
it's going lower.
Right.
So that was a difference.
Yeah. Here's a new alert for UJ, a sell. Let's go over there really fast. Oh, I am on UJ. Okay, cool.
a quick thing, Don. It's 11 o'clock, and I know you have a meeting. I have one coming up too.
No, sounds good. I am going to look at this one and probably take this trade, but I want to look at it first and mark it. So I'll do that separately. But we are at 11, and I'm going to get ready for meetings as well. So hopefully I'll have the time to get into that trade if it makes sense for me. But hey, this is great. I am looking forward to Mike being back, but it's fun hanging here with you, Stephen, and hopefully we'll have some more good stuff for tomorrow to share with some more profitable trades.
Exactly. Excellent.
Cheers, folks. Take care.